Well, good afternoon for those of you on the East Coast and those on the West Coast. Happy late morning. Welcome from all of us at Bank Director. I'm Al Dominic, CEO of the company. It's holiday season. It certainly is my pleasure to welcome everyone who's tuning in to watch this very special conversation all around strategic planning. I was thinking about the holiday season and how it's really an opportunity to look back on things that you appreciate, but also to get excited about what's coming up. And so, for me, I've had this one circled on my calendar for the last few weeks because so much of what we're hearing from banks in particular about their future has become digitally enabled. And there's some really great stories that people can really take in action on if you're willing to spend a little bit of time getting a little bit smarter on some pretty cool things. So we're going to talk about strategic planning in this rapidly evolving digital environment of ours. And I'm going to do my best not to do as much talking as I am asking of questions because I've got three great guys that are coming to us from all over the United States. Got Shane Scaff, who is going to wave at you. He's in San Diego, so he's the one who's holding out on us. He's got the nice weather today. Jorge Sun is up in New York City. He can attest that the west side of New York still is in business, and there are people moving and grooving as we speak. And finally, Zach Nagelberg is up in Westchester County. He's probably going to talk a little bit about the snow forecast that we all are worried about because if 2020 has shown us anything, we're just going to continue to get stuff thrown at us. So again, it's my pleasure to welcome folks today. As attendees join in, I just want to remind you that everyone's been put on to listen-only mode. So that means that you can talk to anyone who walks into your room. But if you have a question, you're going to want to use the chat function or the Q&A function. And I will do my best to pose that question to our participants as best I can. But right now, I thought, we've all been living on these different Zoom calls and, video, chats. Sometimes it's kind of fun to hear a little bit more about the people speaking as they would describe it. So I'd like, to kind of go around the virtual room and just ask each of the guys that are with us today to explain a little bit about their companies, because a company like Bluma that provides, a digital underwriting platform for commercial banks sounds nice, but there's more context to it. Same thing with Derivative Path, with Lending Front. There's some really interesting stories to be shared. So, I said Lending Front first. That means Jorge Sun gets to go. I'll kick it over to you, my friend.
Thank you. So thank you for having me. My name is Jorge Sun. I'm the CEO of Lending Front. Lending Front is a small business lending operating platform that we give to banks, especially small to medium-sized banks looking to digitally enable their small business lending platform. Think of it as a lending-in-a-box solutions for your smaller, high-volume, sort of loan requests that traditionally right now most banks sort of originate through bankers, right? That's a fairly inefficient process for sort of those small loan requests. And what we do is enable them to sort of segregate out those loan requests, add automation, decisioning, online portals to sort of make that a more self-serve experience and really help your bankers become more efficient by focusing on sort of the larger, more complex deals.
Very cool. Well, I'll keep it local. So Zach, why don't you follow up Jorge?
Yeah, thanks, Al, and appreciate the opportunity today. So I run business development at Derivative Path. Been with the company since we launched about 7.5 years ago. We're a capital markets focused fintech based in the San Francisco Bay Area. We also have offices in New York and Chicago in the U.S., as well as a development office over in Manila, Philippines. We partner with regional and community banks to help them offer interest rate, derivative, and foreign exchange hedging solutions. And so we work with about 135 banks around the country today. On one end of the spectrum, we offer a SaaS-based technology solution for the banks that have kind of these internal capital markets resources on staff. And for some of the smaller banks who have not quite gotten to that point yet, we provide kind of a fully outsourced capital markets group that supplements the technology solution. So that's what we do.
That's cool. Very, very interesting. Shane, take us home.
Yeah, thanks for having me. So I'm the CEO of Bluma, and Bluma helps CRE lenders drive faster and more intelligent commercial real estate lending decisions through our unique digital underwriting platform. that's driven by AI and machine learning. And so, in summary, we allow like our customers, commercial banks, private banks, sometimes insurance companies, to come in and set lending profiles in the Bluma platform. Those profiles could be a Fannie Mae, a Freddie Mac lending profile, regional lending profile. And we have over 1,000 attributes that make up a profile. Most of our customers really only care about 10 to 20 of them. The machine learns that profile. We read documents, so you can throw in an OM or a broker package. We pull out rent roll, unit mix, financials. We do all of the cash flow analysis and valuation. In Bluma, we're connected to a number of third-party databases like Reese Moody's, Reonomy. We're capturing that data on that asset. On the borrower side, we can read financials, bank statements, tax returns, K1s. We're doing all the spreading in Bluma. And at the end of that, providing a Bluma score, which is a probability that that deal meets one or multiple lending profiles set up by the bank. And that's what we're doing today at Bluma.
Well, the neat thing is, for everyone who's watching, you can see each of us brings a different perspective on kind of the banking sector, but a shared interest. I think you look at the transformation that we're all going through right now, you realize so much of the legacy mindset is being displaced with not just new concepts, but new cultures, new tools. People are bringing in some really creative, business approaches to solving some really hard issues. And we thought this would be a nice, 45-minute, hour-long conversation that really puts a focus on how do you strategically position your business for the next, 12 to 18 months. The reason I asked Zach, Shane, and Jorge to talk about their companies is I don't want to dive too deep into what they do on a day-to-day basis, but I want to tease out of them some of the interesting anecdotes that they've come across in the last few months as it pertains to banks' appetite to change. And really, thinking about risk and how people can get into different positions to take advantage of opportunities. I thought maybe an easy first question for us to start with is, what have you noticed, post-PPP about banks' interest in bringing in, new technology ideas to be considered? Not necessarily to be implemented, but just to say, I know I need to do something different. What are you guys seeing? And Jorge, only because I'm looking at you at the moment, I'm going to ask you to take a stab at that.
Sure. So, to keep this high level and super relevant, two things we've been able to gather from our client base and prospects, which is post PPP, it was a wake-up call to a lot of lenders on several levels, right? Number one, many of them basically said that they didn't believe there were that many small businesses in their area, right? So all of a sudden they saw a tremendous amount of loan demand from businesses that they didn't even know existed. So they were pleasantly surprised in terms of just how many small businesses there are, right? That said, though, not one of them was ready to even process a small number of those PPP, right? All of them sort of went through a brute force shock process where basically they stopped doing every single thing in the bank, and all they did is created an assembly line to sort of process these loan requests. Exactly the same, regardless of loan size, which basically really showed them, just how, not ready they are, right, for any type of business continuity problem, whether it's a virus or anything else that can impact, basically their ability to continue as a going concern, right? So, yes, there's demand, so that's a pleasant surprise. Two, they just didn't have the infrastructure, right? They had to jerry-rig it. And if you're thinking strategically, if there's another PPP or there's any other thing, you can't do it again, right? It's just really difficult and painful. So they need to adopt new technology. And three, we know this is not going to end, right? Whether it's a recurring thing or something else, right? Things are going to impact the bank. So you need to invest, because I think now customers expect, a better customer experience the third time or second time around.
Yeah, it's really interesting as you talk about that kind of adrenaline-fueled behavior early on in the Triple P's rollout. You could hear so many stories of banks with real reason for being proud of the teams just rallying together to say, if I have to do a manual paper entry, I'll do it. If I have to put this into the SBA's filing system at like 11 p.m. because that's when it opens, I'll do it. If there's issues, I'll do it. And I think that was a really interesting, kind of cultural shift. But your point is a good one. Not all sizes are the same. And having gone through that, I think that's a really important kind of cultural data point that people should be paying attention to. Shane, what about you? What did you learn over the last few months, having heard from some of your clients about what they went through, but also what they're starting to aspire to become?
No, I mean, Jorge, he said it when like all hands were on deck for some of our, certainly for most of our lenders. And with that kind of push to bring people over to help with these PPP loans, from our customers' perspective was, okay, well, because we play primarily in the CRE space, how is this current environment affecting our business? And right, so obviously origination stopped in March, and it was really about how is our current loan portfolio being impacted within the space. And so we, as obviously a technology company, we're helping them understand with their existing portfolio, what does this new market look like for them? How are these assets that they're managing being impacted by this new environment? And then, we're basically, our system is analyzing assets every day, and our banking customers can actually see how the new environment is actually impacting the current loans that they're holding on their books. And so as the people were pushed to handle the PPP loans, the technology kind of took over and was still showing them exactly what the status of their current business is in as they move through this very difficult time.
Yeah. So Zach, as I think about the business that Derivative Path's in, you talked about hedging and interest rates. What are some of the maybe kind of aha moments that some of your customers have gone through of late?
Yeah, well, I mean, I think first off, we were amazed by what the banks were able to accomplish in a short period of time related to the PPP loans. I think, even some of the smaller, more community-oriented banks proved to be more nimble in addressing kind of that onslaught of rolling out a new lending program essentially overnight, which we thought was pretty remarkable. And I think a lot of that was driven by the ultimate desire to serve the customer, right? We find when there's transformation requested internally, whether it be kind of on the loan ops side, just to create more efficiency, that tends to be kind of pushed off. But when it was something that was being driven by the customer, this kind of rise to the occasion was really remarkable. I think, unfortunately, the flip side of that, what we recognized is prioritization is key for banks. They can't take on 10 different things at the same time. And it felt like kind of the more strategic initiatives may have been pushed off as they had to reprioritize to accommodate PPP. So I think we're seeing banks start to kind of finally come up for air and kind of get back to, what do our longer term strategic goals look like. And I think I can see them already starting to be more decisive in going about executing on that strategy before the next, if it's PPP or whatever else is next to come.
Yeah, well, that concept of, how do you prioritize, it in a sense ties in nicely with that of agility. I think a lot of bankers over the last maybe 10 to 14 months have used that word pretty interchangeably. It can be around the way they conduct their business, how they service their customer, what they want their culture to be known as. And agility can be a double-edged sword. I think there's a lot of positives around it, but I also am curious as we think about planning for the future, and this need to prioritize and also the need to be agile, how are you starting to see banks frame those concepts to solve specific business issues? Because one of the things I've noticed is there's a lot of competition to serve a customer better, faster, and cheaper. And if you're a bank and you're not able to address that, then you are really in a bad spot. And I think that's where fintech bank partnerships are at the moment, which is we've got to be really smart about how we're creating touch points and how we're helping to interact with profitable customer bases. But again, Zach, when you're talking about creating priorities, I think that's important. I'm curious to get maybe Shane's take on this concept of agility as it applies to that concept itself.
I mean, yeah, I mean, so much of agility comes from the ability of humans to make quick business decisions. And so, at Bluma, we're allowing machines to continuously crunch data to provide humans with results that they can make decisions around. I mean, because data isn't static, right? It's constantly changing. It's important that we as humans are seeing like the results that are taken into account with this dynamic state of our business. And then a good decision today can turn into a bad one tomorrow, unless you're actually managing to that kind of dynamic data on a real-time basis. And so, really for what we're helping our customers do is really present the results of what real-time data mean for their business, so that when they see those results, they can make decisions on the spot.
So, and I like how AI gets married to, your practical insight into making sense of the numbers and having, some intuition. I'm curious, Jorge, you've been in this space for a while, and you've seen, various tech companies really like grow significantly and capture people's attention. I'm just curious, we've got this COVID-19 crisis that we're still living with and still dealing, with. It's also, in a business sense, really put some strain on, I'll call them traditional business assumptions. How are some of the business challenges that are being surfaced being at least understood, if not addressed, by community banks that you guys work with?
So, so the way we frame it when we talk to clients, right, strategically, right, to say, why do you need tech? Why are you going to, adopt a different way of doing? Is if you think about what a small community bank is essentially a retail establishment, right? You have bankers that establish relationships with individuals, individual businesses, and then you sort of give them a package of products, right, to sort of help them grow and have a deep relationship. The issue with that is that you are essentially open to the same issues that any retail shop has, which is you're dependent on a face-to-face interaction, right? And that human being that's very expensive, very knowledgeable, has to deal with very large businesses and very small ones, right? And that is incredibly inefficient. So the way we're sort of framing it now is the advancement of technology has gone to a place where you can, sort of segregate it out, different paths, right? You have your traditional consumer, right, score only, and then you have your commercial, but the problem is commercial encapsulates small business, right? So they're all kind of lumped in. And what they need to understand, and what they're starting to understand, is you need a third rail, right? You need a different way where you can actually, help your bankers out, right? Both either in the way they source decision, but also in the way they interact with customers in such a way that for a certain segment, they shouldn't be involved, right? You should be able to add automation. You should be able to allow your customers to self-serve, right? Be able to access products 24/7. So there's really, one of the biggest, so there's three things that are happening in the market, right? And when you talk to customers, they care about speed, number one, right? Likelihood of getting a loan product is number two, and not even three, right? It's like six is price, right? And guess what? Banks offer price, right? Not speed and likelihood to decline, to get approved, right? So they're not even offering the base level need that a customer wants. Second, you have to think about, well, what customers want, right? They want a seamless customer experience. And if you're forcing people to go to your office or talk to a banker for anything, right? 100% of all requests, right? It's not even just 10%, it's like 100% of your requests. You're not giving them that customer experience. What that has done is that has opened the door for a myriad of other competitors, right? Competitors that you would never thought exist, right? Like Amazon. Now think about it, Stripe, right? Stripe has said, hey, we're going to make partnerships with, the biggest banks. So you can Shopify, right? Because community banks are not providing that speed, that convenience, so they've opened the door. So you have to say, you know, how do you close that? And the only way you close that is through technology and the right application of technology and customer base. And then lastly, really, you know, again, business continuity, right? How can you even help your customers if the way you're structured, you can't even go to the branch, right? Or at least you can do a lot together in a room processing applications, right? You need to be able to do it at home. That requires a different infrastructure or a different treatment, at least to a big segment of your population. So those basically four things are things that they need to think about. And that's what we talked to them about, right? Strategically, what adoption of technology can help you solve all of them, or at least the majority of them. Because right now, I'm a retail shop with a banker is not going to work going forward, at least not effectively.
No, I mean you're nicely, you know, surfacing some of the major, you know, threats that I think are being discussed in the boardrooms across the country right now. Because staying relevant and staying competitive, I think those are probably going to be the two words that not just banks, but a ton of companies in the United States are going to have to own up to and say, how is it that we can do what, you know, Jorge just said? How can we deliver that experience that is, you know, delightful, that is easy to understand, where I'm not as price sensitive as people might think I am, but I want to have an answer and I want to have information that, you know, is accessible in my mind, you know, 24/7, whereas a bank might say, I'm not so sure that's the case. Now, Jorge, you were talking about, you know, automation in the promise that's there. I'd like to bring it to Shane because he touched on AI. You know, when you think about individual expectations and how they're shifting, help us to, you know, contextualize artificial intelligence as it is right now being used to address some of those customer confusions or the things that are happening where you really want the machines to be crunching the data so you can get a better picture as to the world in which you live.
Yeah, I think when most people think about AI in the workplace, they don't initially think about the customer experience. They think about replacing jobs within companies, right? And I think it's a very easy thing to go to. The way we look at AI is really about how to improve the actual employee's work experience. So we look at how do we move employees to the art of their job, right? And use the machine to do much of the science, really the work that humans really don't like to do. And so we start with one of the reasons we got into this space is because I look at the job of underwriting and analyzing, you know, these loans. You know, it's not for most typically a wonderfully pleasurable job to do. And so if we can come in and use the machine to do a lot of the kind of tedious work and number crunching and move the human to the relationship, the art of their work, that's really where we're focused. And then the benefit of what that does for the customer experience, I mean, it's all the things that we talked about, you know, and I agree with Jorge, you know, speed, like the ability to have a machine go out and pull data from 12 different sources, bring that data in, crunch that data, and then actually produce results to the client in minutes that typically, if they had to go through a human, might take them days. That is, I mean, you can't do that if your plan is just to go with, you know, your normal manual processes. And so I think the way we look at AI is really from a perspective of it starts with how do we improve the workplace, and then that generally translates into speed for the customer.
Yeah, and you know, as you were talking, Shane, what I was thinking as it kind of relates to Zach and what, you know, what Derivative Path does, you know, technology does not just enable efficiencies. Technology can help you find new business opportunities, and it can help you make money. And, you know, I think banks are going to be, again, under all this pressure to figure out who's profitable, what niche they want to serve. Is the business model that they're operating the right one going forward? You're going to see the Stripe Capitals of the world come up with these new announcements about embedded finance. You're going to see interesting partnerships. So, you know, I kind of turn over to you, Zach, and I think, geez, you've got all this intelligence, you've got all this, you know, data, you know, and making sense of it it still takes some, kind of human touch to decipher what you're seeing. What, from a planning standpoint, do you start to, put higher up on the list to focus on as we head towards 2021?
Yeah, I mean, it's a good question. I mean, I think, look, AI and machine learning get a lot of the buzz and attention when it comes to some of the kind of digital transformation and innovation. But I think it's also kind of the simple things, right? Electronic signature being incorporated into the loan process is just something that, customers are coming to expect. And so, when I think about AI, I feel like, it can be viewed as both an opportunity and as a threat. I think it's an opportunity for the banks that are forward looking and really, view it as a way to differentiate and win new customers. I think it's a threat in the sense that, if you don't do it and other banks do, that doesn't bode well for retaining those customers. And I like to use the Uber analogy. Prior to Uber getting rolled out, it didn't seem all that difficult to go out and hail a taxi, right? You just went and did it and didn't think twice about it. And then once there was this digital experience where you could click a button and the car showed up, now the thought of going and hailing a taxi doesn't sound so appealing. And so I feel like the same thing is starting to happen in the banking sector, in the sense that, if once customers get exposed to this new technology, other banks, that's just going to become the expectation. And so that's where it can also be a threat, in the sense that, the kind of the low water mark just starts to, the bar gets raised higher and higher, and that just kind of becomes the standard. So I think that's the way banks should be thinking about it, both as the opportunity to get in front of this, but also the threat, unfortunately, if they don't, of just the reality of changing customer expectations.
Yeah, and what I appreciate, about Shane and Zach and Jorge and how they're talking with us about this today is, instead of giving just the generalities, I like you're going to more specific, areas of a bank's business behavior. I want to just take a pause. If there's, folks listening who have questions, maybe it's about artificial intelligence, maybe it's about the, the planning process that's going on. I encourage you to, drop those into the Q&A, box, and we can address them. As I think about what we're talking about, in some ways it's no different from reading Michael Lewis's book Moneyball, where years ago they talked about the Oakland A's and how they found this competitive advantage. I think you see some early movers that, figured out really fast that they could, provide banking as a service, and they transitioned their bank's business model in that direction. Or they thought, we should be partnering with a fintech, and 5 years ago that was still a fairly novel concept. I think right now, as we're thinking about planning, it's just obvious to pretty much everyone that you can't go it alone. Even the biggest companies aren't trying to solve every problem. I think the value of the network that you're in is really important. So I'm curious, again, as we think about strategic planning and we think about the relationships that you have, what are some of the unexpected, I'll call them unexpected shifts, in terms of how other tech companies that you're working alongside are bringing into the bank? Because that can also influence how they work with your company, right? So if you're a bank that relies on a traditional core, they're going to have ideas for how your future might look. If you're looking at some of these cloud-based companies that can be core agnostic, they're going to come in with different ideas. I'm curious, when you're being invited in front of a CEO or board to talk about, what the immediate future might hold, are there things that are kind of surprising you in the questions that are being put to you? Jorge, you look like you got you're contemplating this, so I don't mean to.
Yeah,
I kind of want to.
Yeah. Look, I think it's all right. So let's take it to the pre-COVID, post-COVID, right? Because what's happening is, and I will just really echo something that Zach really pointed to, right? Which is the last 12 months, essentially, right, has been a massive re-education of everyone's customer base about not having to go to the bank in person, right? Yeah. So, and the reason this is important is whenever we talk to clients, a lot of them would say, well, we have customers that love coming to the branch. Well, guess what? That is no longer the case. And to Zach's point about, gee, you know what? I was able to do everything and not go to the branch. Now the idea of going back is embedded in their head that they don't want to, right? So this is pre and post, right? So it's a massively important sort of shift. And to sort of answer your question, I think, it's really about, how are they going to position themselves in the future, right, to compete, right? It's really about, what kind of investments can they make when you think about the cores, right? So I think cloud computing has fundamentally changed the technology, the way banks will consume and any other client consumes technology, right? Usually the reason banks are afraid of technology or making any investments is the traditional model was, I have a core and I have to have all my servers in one location. I need a huge IT staff. And I need people to sort of maintain this thing, right? That's no longer the case, right? Now you can basically outsource your whole IT infrastructure, have even better security, disaster recovery, backups, infrastructure with some of your, sort of your vendors, right? Like, for example, us, right? Where you essentially are buying technology that is future-proof, right? This whole idea of I need to buy versions is gone, right? The whole idea that I need to have, staff to maintain it is gone, right? All you basically now really have to do is really focus on what is your core value prop. You're a good lender, good relationship, right? And you can deliver sort of customized product sets, right? Whether it's deposits, lending, right? It's not that architecture, right? So, and that's what's happening, right? We're seeing now an evolution of looking for technology partners that are going to help you go where the puck it will be, not where the puck is.
Right. The challenge, in my opinion, is you can outsource a lot of things, but you can't outsource your aspirations. And I think, different businesses have different ideas of what ambition looks like. And as we're talking about technology, as it changes what's possible, I think sometimes people set their bar too low. And again, the beauty of a presentation like this, we have a diversity of ideas. And we just see different markets. I mean, Shane being out on the West Coast banking at the community bank level is different from what happens up in the Northeast. I grew up outside of Boston. I love Massachusetts. It's kind of a provincial part of the country when it comes to how things get done. So we talk about community banks and we take a broad brush and just paint them as if they're all the same. But again, I want to come back to this idea that Jorge started on, but both Zach and Shane see, which is bankers are not fools. I mean, these are smart, accomplished business professionals that aren't going to sit passively and watch others beat them at a game that they already know. So the Wayne Gretzky analogy is a good one, but these guys know how to skate, they know how to shoot, and they go to practice every day. So I'm curious, again, Shane, I'll ask you, as you're, being brought in to help banks think about what's possible, how much of a goal could you realistically put in front of them for the next 12 months, for the next, year and a half?
Yeah, I mean, so for me, I'm somebody that always wants to move faster than the banking space will allow me to. So I think a lot of the decisions that I see that are being made or not being made are around fear, right? And so I think when you have a heavily regulated industry like commercial banking, the first question is, can I do that safely, right? And will I be breaking any regulation? So I think from a technologist perspective, we have to be patient to take these banks through the process and help kind of educate where we're at with the technology, that what it means from a security perspective, and that it's everything's safe. But generally with the banks that I'm talking to, I am kind of educating on where this is going, right? Where is, and Jorge talked about where is cloud-based computing going? And because all you need to do is look at really any other industry to see where banking needs to go, because there's so many of them that are so much farther along, and it's not like this is not going to get there. We're going there. It's just a matter of time and willingness to take those steps. And I'm actually been super surprised, in all transparency, because I'm not coming out of traditional banking. I was told going into this, when we launched Bluma in 2018, that it was a very difficult space to sell technology into. I've been actually pleasantly surprised by the reception that the banks have given us. And it's not just community and regional banks. We're talking to some of the largest national banks in the country. So again, I think there's less fear now, and with every month there's going to be less and less fear as people start to really understand, again, what Jorge talked about, that they need to produce speed. Their customers are going to expect speed. And as Zach talked about, nobody wants to go into the physical location anymore. They have to move. And if they don't, they're going to be left behind.
Yeah, we're in a sense, we're really lucky to, I should stop myself. We're lucky to live in this country to start with, but we're lucky as business, men and women to be able to see other industries that are going through the same types of challenges, and they're responding in different ways. So I think about like telehealth in the health sector. Jorge talked about retail and just, knowing where customer patterns are starting to emerge in kind of unexpected places. The whole TikTok, generation of, getting very discreet messaging, to a receptive audience. I think there's a lot that banks can pick up. This has clearly, touched a nerve for some folks that are watching, because I got a question, and I'll just kind of put it out to anyone who wants to raise their hand. But, it basically says for community banks that it might have limited resources, and that I'm going to interpret it in a lot of ways. How do you prioritize the spend on technology, and to whom those partnerships, should go, especially if you have your core provider that you typically rely on? So again,
I'll answer a component, because we get that all the time, right?
Do you? Okay, Jorge.
That's the beauty of cloud computing, right? Somebody who comes in with a cloud-based solution, because essentially, and again, it also depends on the business model they're having, right? Like ours, for example, right? And we're not the only one, where essentially what you are paying for, right, is not the core technology infrastructure, right? So you don't have to go and pay $1 million to get this installed, and pay another $1 million to get consultants come in and sort of build it the way you want it. Basically, what you're paying for is for success, right? It's a fairly low. A lot of these cloud solutions, there's a fairly low entry point, and what they're betting on is that when you absorb the technology, right, and you actually use it, that's when you pay for it, right? Because now the carrying costs and the deployment of the technology, because of cloud computing, is so low that it's allowing your smaller banks, right, to literally use this. I'll give you, just for context, what that means. If you use your traditional sort of, big commercial platform, usually that's in the millions. Now you can get into small business lending, world-class business lending, for basically the cost of, half of a commercial banker, right? Yeah. So, I mean, it's possible now. You just need to obviously look for the right partners.
So I'm going to take that and throw it to Zach, because you talked about priorities earlier, and this one again is all around banks that might have limited resources. And how do you prioritize the spend on technology and partnerships? Would you build on what Jorge just said?
Yeah, I mean, I think what Jorge said was spot on. But I also think, I think about it the way I think about any business decision. I mean, what's the return on investment? What's the cost benefit analysis? What are the risks by not, moving forward with this sort of an effort? I mean, I think those are all both qualitative and quantitative things that can be taken into consideration to help evaluate. But I also think I kind of like this concept of crawl, walk, run. And I think, there are ways to get access to modern technology in incremental steps, where you're on the margin, improving the customer experience, helping create operational efficiencies, but, you're not necessarily changing core providers and completely changing the way you conduct your business. So I guess that's how I think about it. How do you get some nice quick wins? Are there things you can do on the margin to improve without the massive spend? But kind of overall, yeah, it's got to be the same cost benefit analysis that you run when thinking about, any other aspect of the business. What's the return on investment? What's that look like?
So Shane, I think because you put 2018 next to your company's name, this one came in. It's all around vendor management. And the question is, I'll put the parentheses, should early stage fintechs be judged by a different measuring stick as compared to established or traditional longer term vendors when it comes to vendor management? And the context was, these are tech companies that don't have a track record to lean on, but many bring solutions needed by banks that are often, maybe coming from an unproven fintech, but banks would be really interested in them. Your thoughts?
Definitely. I mean, and Jorge and Zach both kind of touched on this, but it's super easy to implement a cloud solution now. I mean, you can try it. It's not like, you have to pay $1 million to implement and a huge on-prem licensing fee. So with a lot of these cloud providers, in some cases you can try before you buy. I mean, they can launch their platform, allow the bank to get comfortable with it for 30, maybe more days, and then, go into a commercial agreement. So I think like the flexibility of how technology is being consumed and purchased is like, it's like never before. I mean, it's a whole different game today. And so as an early stage tech company, Bluma, I mean, we've been super flexible with our clients in terms of how we engage with them commercially. And the reality is we've taken really kind of all risk off the table because we know that we don't have, a decade of customer references behind us that they can pull from. So just making it as a vendor, we make it just super easy. Take as much of the risk off of our clients' hands as possible. Allow them to do things like pilot and just not make it such a stressful decision for them.
Yeah, the third party. Go ahead, Jorge.
Yeah, sorry. I just wanted to add my 2 cents on this particular topic because I think it's really key because we faced it, right? So, and when you think about a lot of banks, what they do is they rely on, an RFP process, right? In the vendor management, there's like a checklist. And what we have found, right, is never does a new technology provider, even if it's a good, solid company, right, good financials, good growth rate, do they ever come ahead in sort of the RFP process? Because the RFP process forces you to choose the safest bet, right? Sort of the plain vanilla solution. And that's usually a good strategy when the technology, environment doesn't really change that much, right? The economic environment doesn't change. It's very stable. So you're just basically choosing among sort of like, very similar peers. But when the environment is changing so much, right? Technology, customer behavior, forcing you to pick, look at 5, providers. And then because you have this policy that says, okay, you need to have 5 exact like banks, right? You need to provide 5 years of financials and all this other stuff that essentially what it does, it weighs it to the older, more established companies that by definition don't have the solutions you're looking for. You're kind of putting yourself automatically at a disadvantage. And I will echo, Zach's and Shane's points where, look, you can try before you buy, right? And you don't have to mentally marry yourself to an RFP process to begin to try new technology and adopt it. That is certainly that's certainly the case now, right? You can do that now. Maybe not 10 years ago, but you can do that now.
Right. Well, as you're talking, I just was shifting my little workstation because there's a book that I've been reading called The Change Function. And the tagline is Why Some Technologies Take Off and Others Crash and Burn. And I think this is what, without talking about the book, the title itself kind of aligns with what I think a lot of banks' senior-most leadership team worry about, which is it's not just the third-party risk and managing your vendor relationship, but it's where are we going to be in a few years, and are you going to be there with us? You see different technologies that are risky that have great potential and great value. There's others that seem a little bit more kind of commercially viable right out of the gate that you could pick up. But then that becomes something of a commodity. So I'm curious again because each of you spends time talking with decision makers, kind of what sparks a change? What helps them to say, I'm doing something in a manner that I'm comfortable with, but now I know I need to shift gears and do something that I'm not as familiar with, but I think is the right thing. Is there a trigger that you guys are seeing that other bankers might appreciate, because they could be feeling like, I want to change, but I'm not really sure how to start that whole transition?
I can take a stab at it. I mean, it's an interesting question. I think we launched back in May of 2013, so we started at a point where vendor management was very difficult for us, for all the reasons that Shane and Jorge outlined. Do you have customer references? Do you have audited financials? Do you have SOC reports? When you're first starting out, of course, you don't have those things overnight. I think now that we've been around for 7.5 years, we recently raised an outside investment from a growth equity fintech investor that was announced. So those things get easier. But I think what was most compelling is, banking tends to be a copycat industry in my experience, and I think what was most powerful was having a few banks, who were marquee names, kind of early wins that other banks can say, okay, you know what, if they like it, they use it and they like it, then oftentimes that was more powerful than anything I could tell them about our InfoSec policy and business continuity and anything else. So I know it's kind of easier said than done and kind of a chicken and the egg scenario, but I think getting early adopters, finding ways to incentivize banks to work with you early on, and then that kind of success begets other success as other banks get comfortable that if ABC Bank was willing to work with this fintech, then maybe that's something we should look at as well. So that's kind of my perspective on it.
It's a good and fair one. Shane, Jorge, anything you'd add on that count?
I mean, I think Zach hit it. I mean, I think for having a key referenceable client that everybody knows is super important for any early stage company. And I think for us, we really try and come at a new client with how we're going to use technology to improve their employees' lives, which ultimately will resonate in better service for their customers. And so again, going back to what I talked about and explaining, like the workforce is changing, right? The people that have been doing the underwriting and all of the analysis for the last couple decades are now moving out, and there's a whole new group of workforce that's moving in that is wanting something different. And so I think we generally start to look to talk about that first, the human element. And that seems, alongside closing a good account that you can reference, seems to work well.
So how do you achieve that balance of bringing in kind of the new talent alongside existing employees? Because it's not just a wholesale swap out of one team for another. And I'm sure you're kind of caught sometimes in the crossfire, so to speak, of somebody has aspirations, but then there's the other folks that have been in an organization and maybe they're a little more experienced to the status quo and they kind of like it. Is there a way that you see that divide being politely navigated?
I think we're looking at like the general evolution of work of a specific job function, and I think we can all look at any type of manual activity and understand like somebody's going to be working on how a computer can take a lot of that manual activity out of that job function. And the reality of the benefit doesn't just benefit the millennial, right? It benefits the baby boomer that might be doing that job today, right? It's just, we're looking at how do you take a piece of the job that really, as a human, I know that I don't need to do, but I have to do, and put that onto the machine so I can focus on what I like to do, which, for the most part is maybe more on the relationship side. And again, we call it the art of the job. And so we're constantly looking for the art of the job and then how the machine can take over most everything else.
Yeah, I like that description. And, again, we've got 8 to 10 minutes left. If there's questions, I'm doing my best to ask them in an intelligent fashion. But I didn't want to miss the opportunity to, really request that Shane, Zach, and Jorge each just take a few minutes to give their outlook on the start of 2021 as it relates to the changes that are taking place in banking. Everyone has their top 10 lists and things that they like to say, well, we think this is going to happen in 3 years. But I think grounding that in the reality of the work that you do, are you seeing, pockets of change that you think aren't going to, snap back to the way things were, but are going to not just be where they could be at the moment, but potentially accelerate for, years to come. So if I put it to you like that, I'd really love to hear how you're envisioning the first, 6 months of 2021 shaping up. Jorge, can I start with you, please?
Sure. I'll do it two ways. The first 6 months and kind of the trend that I think will continue, because to us is very clear. I think 2021 is going to be an interesting year in that you're going to have a lot of community banks struggling to lend, right? Because you still don't have the infrastructure, right, to successfully look at the right information, right? All of them still rely on give me your tax statements from last year, which 2020 doesn't mean anything, right? Let me look at your credit bureau of the owner, which again doesn't mean anything because he's probably used up all his credit lines, right? His business up. And let me look at your personal financials. Well, he uses up all his money. So there's going to be a lot of difficulty with the current business model that exists today and just how, community banks will lend in the short term. A lot of them are, I think, going to lean on government-backed programs, right? But that said, right, it's not right to think that they're not going to lend for the foreseeable future. So there's going to be a rapid retooling, or I would expect that there should be a retooling, at least in a segment of them, to say other companies are lending, right? Who are they? What are they leveraging? And can we get access to that technology? Because lending is lending, right? It's the same stuff. And that will go to my second point, which is the trend that I think everyone should just have in their mind, because we're seeing it and it's a global trend. And that is the advent of digital platforms, digital payment platforms, such as Amazon, Shopify, Uber, that are essentially monetizing the activity of these small businesses, whether it's a 1099 or a shop online. And what's happening is that information, right, that relationship is being leveraged to lend, whether it's by the platform or a partnership of a bank with the platform, let's say Goldman and Amazon. And that's just a reality, right? There's a lot of alternate lenders that are in that space. And that whole thing is happening, right? We're seeing it with potential clients in other parts of the world where everything's going digital, right? Like we just said, everything's going online. All the data is going to live there. I can tell who you are, how long you've been there, how much money you're making, and I can control the payment flow. So making that incremental lending decision is really not that hard. And if you don't have the right technology to play in that space, you're going to be really far behind everyone else, right? So there's a trend in that space, and the question is, when do you start the journey to try to get on that space, right? And the first step to me right now is don't do 100% of your loans out the branch, right? It's not that hard. Start small, right? Start with 10%, 15%, but you need to start.
Yeah. Let's keep it on the East Coast. Zach, what's your outlook?
Yeah, I think the optimist in me says that with the vaccine getting rolled out and pent-up demand, that we may very well see a kind of a quote-unquote normalized environment, at least in kind of the second half of next year. I think the realist in me is still kind of seeing a difficult operating environment. And I'm looking at it from a yield curve kind of interest rate perspective. Rates at relatively close to all-time lows. So I still think NIM is going to be challenging, in addition to loan origination and the other concepts we've talked about. And so I see fee income really being, non-interest fee income really being a priority for at least the banks we're speaking with. And one way they're achieving that is by looking at capital markets products that have more traditionally really been dominated by the money center and kind of largest banks. We're seeing this concept of democratization within the capital markets, where more of your traditional community banks and regional banks are getting smarter about how to offer interest rate derivatives and foreign exchange products to their customers, with the idea being, hey, there's meaningful fee income that's potentially being left on the table by not offering it. So I think that's something we're working with banks on today. I think the other piece is just having access to real-time data, I think, is going to be increasingly important. I know when COVID first hit in March, April, May, we were extremely busy with banks hedging their balance sheets using derivatives. And the reason being, we had this massive shift in interest rates happen very quickly. We thought we were in kind of this gradual, rising rate environment, and then all of a sudden, Fed low for long policy kind of shifted on everybody. And rather than trying to roll out new lending programs or try to manage this interest rate risk change in the investment portfolio, the banks that already had access to derivatives were just able to go on and put on a transaction and kind of get the right asset liability outcome that they desired, as quickly as the pandemic hit, so to speak. And so I just think that we're going to continue to see banks get smarter about accessing these tools, how they think about capital markets products, and hopefully that will, at the very least, help level the playing field for the smaller banks and kind of best position them, whether it's kind of my more positive outlook or more realistic outlook for what 2021 will bring.
I like optimists, so we're going to take the optimistic approach.
Let's do it.
Shane, sunny San Diego, you're going to wrap this one up for us.
I'll end it optimistically. I mean, I'm generally an optimist as well, and I won't try and do this from a banking perspective. I'll do it more from a technology perspective. I think the market itself, there's some huge opportunities, obviously, in my world on the CRE side, and some extreme difficulties, and it's going to take more than a year to figure out where everybody lands. But from a technology perspective, we're kind of seeing the end of monolithic technology. There's so much modularity that exists out there with cloud platforms and the ability to plug in to various systems and to integrate with various systems. And Zach talked about the data aspect of, being able to utilize all of the data that exists out there to provide very quick decision making for the businesses is going to be super, super important. And then kind of where AI and ML and some of these technologies are going to take us, it really to a place where we're going to now have answers before we even ask the question, right? There's an answer for me in my computer right now, and to a question I have not asked yet. And that's where we're going, and we need to embrace that, and that's here in 2021.
Well, we'll check back in a few months and see how right we were with these predictions. But at this point, I just want to thank our three guests. We appreciate you doing this. Everyone who tuned in, you had great turnout. Appreciate that. We're going to put this up on bankdirector.com within 24 hours. You'll also get a link to the presentation so that if you want to review certain points, you can. If you want to share it with some of your colleagues, we encourage that as well. Again, I'm Al Dominic. It's been our pleasure to host this conversation. Shane, Jorge, Zach, been a pleasure. Happy holidays, guys.
Hey,
Happy holidays, everybody.